All right, guys, let's go ahead and start a Home Depot earnings trade. We're going to look at this and see if it's worth it. So I'll go through my process of how I do this. And the first thing I'm going to do is start with a quarterly chart. And just so you know, the reason why I'm using a lot of quarterly charts is because in this market, we pull back so much. I need to know if we've come into demand. So some of this you will not see from YouTube because I'm asking my members here. But on that note, members, do you see what I see first of all as soon as we open up the quarterly chart? I mean, what are some of the things you see? Right? Inside and up formation, absolutely perfect, guys. Your trendy edge is identifying that demand zone, and it worked to the tune of, okay, remember, these blue edges are for leap trades. You're looking at about 266 on the first attempt, puts you up to 333, and the second time at 318. That's pretty crazy, right? 318, Dave. So inside and up formation, let's go ahead and identify that really quick. And this right now is an inside and up formation. So we're going to do settings, inside and up, boom. And let's go ahead and identify that with some numbers. And just like that. And from the quarterly, that's what I have. Up and to the left, I have no inside and down formations. So I'm going to have to take this time frame and move it to a monthly. And what I'm doing is I'm looking for an inside and down. I don't have anything on a monthly either. But one thing I do have is a break of the cloud. So I want to identify this cloud about right there. And that's going to be my support for right now. Okay. So we're going to name this support. And then the next thing I'm going to do is measure the fibs from the pivot low here into the pivot high. And I'm going to check that support. And it's saying that the support comes in right between the 23 and the 38. I'm going to move support down to the 38.2. Okay. And now inside and down, up and to the left, I don't see anything. I'm going to go to the next time frame, which is the weekly. Up and to the left, the only thing that we have in the way is going to be the trendy edge. We could see that on the other time frames. Okay, so we're going to actually name this a target. And we do have an inside and down formation. We want to identify that. So we take our eyes up and to the left. So up and to the left. And I have an inside and down formation right here. Okay. I'm going to bring this inside and down all the way to the top of this candle here. Okay. Just like that. Next thing I want to do is I'm going to identify where I stop the box, which is right there. So our 333 by 340. This would be a long-term target for me. And what we've been doing in this market is we've been doing short-term puts, okay, on the debit side and long-term debit calls. And what we try to do is identify the target to the downside that would pay for the long side. Okay. Notice also on this weekly chart, we have created an inside and up formation. So that's a positive so far. All right. But if this breaks down, I want to know where price could come back to. And notice that the support that we found on the monthly chart is actually in line with the inside and up formation. So for me, targeting the downside would actually come around that 298. Current price is at 310. All right. Let's go down into a daily. All right. What am I looking for? I'm looking for inside and up formations where we could see support. And right down here, we have another one at 276. But notice that this actually already tested that and then moved up from there. We have a little gap fill here. We could say around 289. Okay. So far, 299, 300, and 289 is a possible area where price can move back to. Notice also that this possible area has to be, or is, sorry, it doesn't have to be, it is confluent to the daily cloud. I think that's really cool. If you know what I'm doing, everything kind of synergistically comes together, which is just really, really neat. Okay. So on here, I'm going to just say, actually, I'm going to say, I'm just going to put these two support zones here. We don't need a box. And then let's go to the 4 hour just for good measure. And you can see that the support level is actually in line with this demand that was pushed out on the 4 hour. Now, to be fair, this is from Thursday, I'm sure. The whole entire market looks like this. But what I do note here is that our support levels are really solid as far as like all time frames are concerned. If anything, I might move this down just a tad about right there. And I'm going to bring this one down. So these numbers that I have are 295 by 285. Okay. And we know that on the debit spread to the downside, I would probably actually do 300 by 295. But first, I need to see if it's worth it. Okay. So 295 by 300. What I mean is, what is the cost? What is the return? And we're just going to keep that right there. Okay. This text, we're going to say, put debit spreads. And we don't know if these are the actual ones I'm going to buy or not. We will know in a second. Okay. And up here would be the call debit spreads for a longer time frame. Longer DTE. Okay. Yeah, what about demand and supply for building homes? Right? All right. So what I do is come over here and look at my options. And I'm going to go into HD. My implied volatility for tomorrow is only 69%. That's not bad at all. Um, let's see, short term, I said, let's see, what's the 300 by 295? That's $1.33. And that only pay well, that pays out $367 for 133. But I actually like doing these a lot tighter. So like a 297 by 295 is 63 cents. And that pays 187. And what we need to see also is on the long side, say 330 by 340 out 16 December. 330 by 340 cost me 220. And that pays out 780. Okay. But what I can do is a 335 by 340 and it's only $1. Okay. So I need to write this down while I do this. So, example 335 by 340. Whoops. Cost 94, let's just say $1. The return is 400. Okay. Whoops. And I got to put the DT in there. And this is going to be 16 December. Okay. So what is the objective here? We want to find something that makes sense from the support levels that would also finance the long side. Just so that everybody understands from a debit perspective, what you're doing is I'm buying the 335 and then I'm selling the 340. So you're capped on how much you can make. As I said, this is about $1 and it pays 4. If for some reason price drops into this level, we want that to finance this. So you take the total cost of this. Let's just say that I get in for $1. And let's say that this down here costs 60 cents. Then the total would be $1.60, right? That I'm risking. Which, to be quite honest, I'd rather do that than go out and buy a call at the money for $1,000 and be completely wrong. That's why I like this strategy. Okay. So again, now I have to look to see if I can cover the cost of this. All right. So we know that's $1 to the upside for those strikes. And I could get 4. And the short term would be the put side. And I would be trying to get, probably like, let's do some fibs just really quick. Yeah. So 300 by 295. Let's see what that cost. That's $1.30. And that pays 370. But I like the 297 by 295. That's how I typically would do it. So this would cost me a total of $1.60. And if I hit to the downside, the 60 cents pays $1.90. See what I mean? So the whole cost of this, if I were to do this, is 1.6. Okay. If I hit this, it's $1.90. I'll pay for the trade. Okay. Matter of fact, I might actually have, if I were to get max payout, I get a total of $30 from this trade that I make. The idea is if it comes down here, I buy back the short side of HD. Okay. Does that make sense? So I buy back this 340 and now this 335 will be a lot cheaper. So I finance the trade and then I go long on the 335. And what I'm trying to do is make this a free trade. Okay. Now, sometimes we make extra money and it's a free trade. Just kind of depends on how you want to do it. You don't have to buy back the short side. I mean, if the whole thing costs $1.60, but we make $1.90, this whole spread is free and it gives you 30 plus days of having it. Now, what if the opposite happens? What if the market pushes up through this and you get 400? Then we pay for the whole thing, make a lot of extra money. Okay. And then the third thing is, what if this happens and it just stays sideways? Then you can easily lose on, I wouldn't say on both sides because we really don't know if this will happen by Friday. Okay. But the premium will be taken out of the trade itself. But the cool thing is, what I love about this strategy is, depending on what your past life was like as a trader, you know, risking $1.60 with using actual supply and demand levels, I feel a lot better about than going out into the market when I first started trading and just going, hey man, you know, I like to go to Home Depot every weekend with my wife, and I notice there's a lot of people in line, so therefore I'm going to buy a call for $1,000 at the money, and I'm just going to wing it. I'd much rather spend $1.60 and have both levels covered, and if I lose, I'm risking $1.60. Okay? So, anyways, that is my strategy. These are my levels that I'm expecting into earnings. Okay. So, what I like to do is just kind of do something like this. And the iron condor thing, I mean, I don't go off of, first of all, the last thing we want to do right here is then we go to the analyze tab on Thinkorswim. So we want to do this at the end, not before we assess it. And the reason why I say that is because if you're looking at what the market makers are thinking is going to happen, and then you're going to execute off of what they said. So I like to actually see afterwards how close I am to the market makers. So HD is pricing in. The market makers are saying $16. Let's look at the math. Current price is at 310, and I'm saying that price can go to 333. Pretty close. 13 by 16 could definitely happen right in here. So trendy and market makers are in the right ballpark. And to the downside, what does that give us? That's 295. Yeah. So, you know what? Trendy analysis and market makers for today, we're on the same page. Okay. Now, the reason why I don't like to do iron condors is because I've seen too many people um, look at that and go, okay, I'm just going to sell iron condor around it. And then it goes 3x and they get completely hammered. Okay. And I'm not trying to like do that. I'd much rather just I'd rather just take it on the chin and be like, "Hey guys, I totally effed that up," than be like, "Oh my God, you know, I totally effed that up. I wasn't expecting a 3x move," and then the risk outweighs the reward. So, anyways, I like this strategy. I like those numbers, and I'll probably put this on. Let's see, we're bouncing now, so this is the better place for me to buy. I want to see if I can actually get these for about 50 cents. So I'll put an order in for 50 cents, and that will be even better for the put 297 by 295. So, whoops. And then the long term, 16 December, 335 by 340. So I'll get those now, just in case it decides to go up. And I could change that around on the put side, folks. Um, I might even go even lower because I don't know if I'm gonna be able to get into that. So I might end up doing like a 295 by 292. Those are only 52 cents. Hopefully we'll get some kind of rally out of HD soon, and I'll get filled on the other ones. If not, I'll have to buy it towards the end of the day. All right, so that pretty much sums it up. I'll put this chart in the room. I've already executed the call side. And like I said, it might change the numbers down here. We'll see. We still have some time. We got about an hour and a half.